Hello everyone, welcome. Gap trading webinar this time, and we're gonna have another two in July. So getting a bit more advanced and more advanced, slowly. So gap trading, the process and the strategies. So no, actually today we're gonna go through the basics, what it is, different types of gap and how you what it presents, what it how and see some example for actually a lot of examples that they will help you to spot a gap, what kind of a gap is, and how to possibly trade it. Sorry, excuse me for that. I had a very late lunch and fast, so it's stuck in my throat. Okay, I have uploaded as usual the PDF version of this webinar, so feel free to download it. Okay, and before we officially start the session, I would like, as usual, to let me know whether you can hear me loud and clear, see my screen as well, and myself if you want. So yes, just confirm, please, whether you can see me, hear me, and hi everyone. Um, and in general, if you face any audio or visual issues. Someone is raising hands. Let me double check. Attendees. Let me double check. Who is raising hands? No one. It was just a mistake. Okay. It was Amr. Amr, you raise your hand. Do you want to ask me something there? We have a question box, so please feel free to type anything you want in the question box and I will reply on spot. Now, so I need to go through the disclaimer warning. Please, until I finish with the disclaimer warning, please let me know whether everything it's okay and you don't face any issues, okay? So this material is provided as a general marketing communication for information purposes only and does not constitute an independent investment research. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment leverage products is characterized by a certain degree of uncertainty and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Risk warning: trading leveraged products such as forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risks involved, take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. Okay, you can find our full risk disclosure on the website along with all the legal documentation that you might want to check. So everything is there. If you cannot find it, please don't hesitate to contact our one of our support officers. We have a 24/7, 24/5, sorry, chat on the website. So feel free to contact us for anything you want. Hello, Howard from Uganda. I can see you clearly listening well, but increase on the volume. Let me see what I can do. Let me see whether it's on the maximum or not. I'm afraid it's on the maximum. So, try to increase as much as you can your side of headset as well, your earphones as well. I can see that this is the highest that it can get. I'm sorry for that. Oh God. Okay, let's start. Just a reminder, this is recorded. So if you cannot stay until the very end, don't worry about it. You will get the recording in your emails along with the handout that I have already provided. Another reminder is that this is our email address, webinars@hfm.com. Anything you need, we reply within 24 hours. It's myself, support team, Marco as well. So analyst team along with the support team replies within 24 hours for anything you want, not solely for webinar topics, anything that you're struggling in regards to analysis, okay? If it's something about withdraw, deposit, something with your account, please just send it straight to the support queue. It's myself, I just skip myself. Okay, what we're gonna cover today? We're gonna cover what is, oh, why it's stuck, okay. We're gonna cover gaps, as I already mentioned, what they are, okay, what types of gaps we have. So there are 4 classifications of market gaps. We're gonna see a bit of a quite rare signal that the gaps can provide is the so-called island reversal. Some examples, if you have live examples that you want me to go through, please don't hesitate to send it on the question box. So for example, Andria, there is a gap in the 4-hour chart in cable, and once we finish with the theory and the examples, we're gonna go into the platform and check some live examples. Okay, and as usual, stick your on the question box, and I will go through it as soon as I see it. So, gap basics. So, what is a gap? As my little picture presents, a gap is the empty space, let's say, that occurs due to some fundamental or either technical factors into the market. So, so if we have a quite volatile day, volatile market, volatile asset, etc., sometimes or most of the time, the market participants benefit from large jumps in that particular asset, and that creates gaps, so areas on the chart where the price of the asset moves either sharply up or sharply down, okay, as a result, to show a gap in the normal price pattern. Okay, so I'm sure that everyone from every single one of you have seen a gap before. Maybe not be aware of how to react on it or how to trade it, but you have definitely see a gap. It is what it means. I mean, gap is an area, like an empty area, if I could say with brackets. It shows like a bit of discontinuity in an assets chart, like the little demonstration that I have over here is like a discontinuity in the assets chart in regards to the price, either to the upside or to the downside, either because the price rose significantly or because it falls significantly the previous day's close, or so without no trading occurring in between. This is something common. It's not something rare, to be honest. It's something common, especially in stocks, and especially if we have some kind of a news that have caused a lot of repositioning, or in general fundamentals, not only news. Um, um, so and usually, actually, most of the time is when the markets this news might occur during the night or during the market the time that the market are closed. So that is it calls for an a call after hours. So people sometimes placing their positions during the market during while the market is closed, in order to automatically open once the market is open, so that this is what occurs, this discontinuity space in the price chart of the asset. So it's between trading hours, something that we've seen between occurring between trading hours. Okay, is it busy so far? Rahel, I think it's on your side, guys, sometimes, because I can see that, for example, Arm, Zoran, confirm me that the sound is okay. So sometimes it might be from your side, your connection, maybe your microphone. I can see that my microphone is capturing quite well the sound. So please check whether it's from your end as well. Okay? Okay, let's move on. Perfect. So as we're gonna see today, okay, before we go through to the types of to the classifications of gap, as I already mentioned, there are obviously two types. I mean, a gap down and a gap up. So now let's just to be clear, in order for me to make sure that you all understand what a gap up is and what a gap down is. But basically, we are referring to the I should choose a simpler word, to this discontinuity in the price asset if the price opens in the next session, next day, next 4-hour session, etc., above the previous session. So there is a gap higher. So the gap occurs between the highest price of the previous session and the lowest price of the next session. So the lowest level of the next session is higher than the highest price of the previous session. Okay, so there is an empty gap, not covered by the price movement as I'm saying over here, and it's a gap up because the next session's low is higher and the open, okay, and the open is higher than the previous session's high. So this is what we call gap up. Many times, for many times, what you might hear me saying, DAX gapped up today. So what that means, it opened above the previous day's highs, presenting an empty gap in between the two sessions. So gapped up arises because of large orders outside of normal trading time. So that means that people, due to news, due to fundamentals, due to technicals, for some reason, they have placed overnight during the market close a lot of orders, large orders. So it's not just me, you guys, and another 10 colleagues of us. No, we're referring to the overall global market, so in institutional players as well. So they have placed their orders overnight during the market close, And that created that gap up as soon as the market opened. So when the market opened, it closed higher than the highest level of the previous session, because a lot of orders have been placed outside of normal trading hours. So this is how it usually looks like. Not necessarily bullish candles, okay? But you can see that the high of the previous session, it was lower than the open price of the next session, okay? And now the vice versa scenario, which is a gap down, same exactly mentality, same meaning. The difference is that a gap down occurs when during the market open, the asset opens lower than the previous session bottom, okay? Bottom and close. So it creates this gap lower. Now, as I mentioned, and actually I'm just repeating a bit myself over here. So first of all, as I said, this happens usually most of the time actually due to news cause market fundamentals to change during hours when markets are typically closed. One key example for something like that is the earnings. And in 2 weeks, by the way, we're gonna have our new brand. We will enter the new earnings season, second quarter earnings season, earning announcement. So, for instance, an earnings call after hours is something that could affect the particular stock's price and could lead to a potential gap up or gap down as soon as the market opens again. So earnings announcement is something that affects the markets and tends to create these gaps ups and gaps down. You know, there are a lot of especially US especially US, actually most of the European and US companies prefer to publish their financial reports before or after the market open or close. So any surprise, either to then a pessimistic surprise or a positive surprise, tends to lead the stock price of that particular asset into potential market gap up or market gap down. Yes. So, oops. Why you cannot see my screen? Give me a second, guys. Disappeared. Okay, we're back. So yeah, one example that can cause these gaps is earnings announcements. Another one, liquidity, again due to fundamentals mainly, or some upgrades or downgrades if we are referring to stocks. Example of a downgrade was Tesla. Tesla yesterday night, it was downgraded once again. Actually, since last week, it was downgraded by 3 research houses, big research houses such as Morgan Stanley, Barclays, and Goldman Sachs, if I'm not mistaken. Yes. So it will be very, very interesting to see today in the US Open, so in nearly 2 hours from now, whether how Tesla will perform on the US market open. Okay, so examples, these are examples that could occur, form a gap. An example is that it might be the the downgrade of Tesla stock price by Barclays, Morgan Stanley, and Goldman Sachs, if I'm not mistaken. This is one example of them of the many. Now, I have mentioned earnings, stocks, but I didn't mention gaps in forex market. Okay, and I didn't mention that these gaps also could occur from technical factors as well, because if something has been largely oversold or overbought, we might see some buying the dip or sell the peak reaction, and that could lead to, that's a technical factor that could occur, that could lead to a gap to be performed in any market, stock market, forex market, in general, forex market, currency market, etc. In the currency market, forex market to be more precise, is not so common. Okay, it's not so common, but yeah, if we could see it mainly due to technical factors, as I said. So let's move on. Interrupt me if you need any further explanation for what we covered so far. So there are, come on, move on. Sorry, I forgot to mention, to present some of the how it looks like. For example, we have a liquidity factor, an earnings announcement factor, upgrade or downgrade. So over here we have cotton. Okay, doesn't matter which time frame. Okay, this is a daily time frame. So what caused this gap down? It was a liquidity factor. Okay, this stands for this gap ups that we have seen a few months lower. So high liquidity could lead to gap down. Low liquidity could lead to gap up. Okay, this is an example out of the commodities, agricultural commodities market. This is an example from an earnings report in Netflix back in 2020 that led to a gap up initially. That was prior the earning release, with market participant pricing in a positive, solid earning announcement, but unfortunately, it was the back then in the very first quarter of 2022, the earnings announcement provided it came actually it missed expectations. It came lower than expectation, and that has caused this sell-off on the close, and this gap down the following morning. So this, we could say, this is an earnings announcement factor that affected and created these gaps ups and gaps down. Now, but don't try to, it's not so important. It's wrong that I say that. Okay, it is important to know the reason why it has been posted, it has been occurred, but what is even more important is to identify what type of gap it is and how you can trade it, or whether it's actually it's a good idea to trade it at all. I mean, it depends. Okay, it depends from the asset and so on and so forth. So we have four basic types of gaps: common gap, breakaway gap, runaway gap, and exhaustion gap. And we're gonna go through them one by one. Okay, we're gonna start with the basics, obviously. Before I go through the common gap, just to okay, we have explained why it happens. We explained factors that might affect it and lead to a gap. And just as a summary of what we have said so far, just to clarify, remember I told you that gap up, it means that the next session open is higher than the previous session close, and etc. And the previous session's high, and etc. But what that means, that is a result that there are significant flood of buyers if we have a gap up, or a significant flood of sellers into an asset if we have a gap down. Okay, that's pretty much it. Once again, demand and supply, bulls and bears, buyers and sellers. Okay, I think that's pretty simple. So these gaps shows, especially if it's a big gap, full gap if you prefer, it shows a strong shift in the sentiment overnight. Okay, so it's a sign that sentiment has shifted. So what is for you to do afterwards is confirm that this sentiment will remains on the same side. Okay, it's a complete shift, strong shift of the sentiment. So, as I said, let's start with the common gaps, as you can see over here. Common gaps, they are the most common ones. That's why they have name with this name, common gaps. And usually, this type of gap occurs when we don't have any major events. Okay, so common gaps, they are less important if we have to compare them with the other three types of gaps. Is not supported by significant, as I'm saying here, increase in volume. They are very, very common. Usually happens within a couple of days. And the important for you to know is that they tend to be filled relatively quick. So what that means, so we have a common gap, and we spot the gap, usually within the next few sessions, depends if it's a gap that has been occurred intraday or is in a daily time frame. A common gap tends to be filled relatively quickly. So what I mean by filled is that the market comes down and fill this discontinuity that we had in the price action. Also, they are very well known also as area gaps or trading gaps in general. And usually they tend to be during normal average trading volume. So we don't have a significant increase, massive increase or decrease, massive increase, not decrease, massive increase in the trading volume. So that's an example of a common gap. So let's take it one by one. First of all, you can see that it closed the previous session somewhere here. The following day, the open price was above the range, the previous session's range. providing this gap over here, this gap up, which it was filled the second day. The second, the one, the second day. Actually, 1, 2, 3, the third day. Sorry, the third day. So this is the key with common gaps. They will be filled the next day or the maximum the fifth day. Okay, 1 to 5 days, and we're gonna see this gap being covered. So it's a short. So if you are an intraday trader, by the way, just convert what I'm saying from days to sessions. So if you have spotted the gap in 1 hour chart, have in mind that within 5 hours it might be already covered. Okay, that's in general what it has been um, observed so far. Why does that? Why it disappears? Okay, here we are. Okay, let's move on. Okay, so with another example, this is a gold example in 1 hour chart. As you can see, the gold has been in a rally after a significant decline. Significant decline. Managed to find some ground, rebounded and started to reverse some losses, but we have spotted a repeated resistance. So this 1, 2, 3, 4 times, this area has been retested 4 times. So it was a key resistance area for gold. Because it could signal the complete reversal to the upside for gold. But the asset struggles to break that resistance area for 1, 2, 3, 4 consecutive, four times in a row. So another reversal lower has provided an immediate support level, okay? Rebounded again away from the support level, and we have seen a gap occur on this attempt to retest and potentially break this resistant territory. So common gaps are areas that we might see occurring during, as I said, technical factors. So this rebound and this attempt to break finally this resistance level might have caused this common gap, and because as you can see, the next day it managed to open higher, retest the resistance level, but failed to extend higher. So there was not enough bullish force to extend and help the gold breaking that resistance area. So it's a common gap, and as you can see, it was quickly filled the next following day, which is a sign that by filling it covered the next following day. Not only that, that was the very first sign that they could get back down to the support level and retest the support level once again. Okay, so this quick build up of the gap, it was the very first sign that they could get back down and retest the immediate support level that was identified 3 days ago. But confirmation came the next day with a consecutive negative candle. So by seeing this by seeing the gold filling up this gap and having 2 consecutive bearish candles, that was a sign that you can get bearish with target at the immediate support level that we have spotted after this swing low earlier. Okay? Okay. I cannot see any questions, so I'll just move on. Yeah. Let's go to the next example, the next type classification of a gap, the so-called breakaway gap. So, okay. breakaway. Breakaway is a gap that we tend to see when the very first it's a gap that it tends to occur close to the support and the resistance areas. You can tell me, but Andrea, the common gap earlier, again, it was close to the resistance area. Yes, the difference with breakaway gap is that it occurs when the price actually breaks either the support or the resistance area. So you see over here, the difference is that over here, the common gap was below the resistance area. So it failed to break the resistance area and remained below it. So the difference between the common gap and the breakaway gap is that the breakaway gap means that there was such a strong momentum, such as a large orders have been placed that led to a significantly increased trading volume that managed to push the price above breaking and holding the price above the resistance area or below the support area. Okay, so a breakaway gap occurs when the price gaps above the resistance area. And it holds above it. So now the resistance area has been, it's our new support level. Or to the downside, if the price gaps below the support area and holds below it, and with this way, it means that support now is converted into resistance. Am I clear so far? If not, please don't hesitate to interrupt me and let me know whether you want me to repeat once again. So, yes, another thing about breakaway gaps. Breakaway gaps usually occurs outside trading ranges. So, usually occurs when our asset is moving in a range, a channel or a sideways range, consolidating, or an up channel or a down channel, and we see this gap up or gap down outside the range, suggesting that we might see a new trend being established. So when the price breaks out of this trading range with a gap, that's obviously a breakaway gap, and that could suggest a significant bullish signal or a bearish signal. In this case, this example that I'm showing is a clear breakaway gap above the upper channel. You see my channel, the price is moving within an up channel. So this gap up suggests that we're gonna have a sharp, a fresh, sharp, bullish trend for the asset. So breakaway gaps, by the way, present once the breakaway gap occurs, then it tends to form another type of chart pattern, such as triangles, wedges, cup and handle, around the bottom or top, head and shoulders. So a breakaway gap could also occur out of another type of chart pattern. And if we spot another type of chart pattern, that help us to spot whether it's a kind of confirmation whether we are gonna continue giving bullish or bearish signals. Okay, please explain it again. Okay, once again, Christopher. Breakaway gap, as it names, it's based on its name. breakaway. So it means that it has broken a key level, a key resistance, or a key support level. So in this case, it's a key resistance, okay? And it's usually a breakaway gap. That's why it's called breakaway. It means that the price has exited, went away, okay, from the so far trading range. So you can see in this example is an up. My asset is moving within an up channel, but in a range. So it's holding a range and it's moving within it. So breakaway. So it exited the range, close higher, forming a gap away gap, okay? And once this gap is occurred, we might see the asset slowly, session after session to form a chart pattern. So we need to be patient in this case, guys. This is not a call to action. This is a call for you to keep an eye on it, make sure whether to double check whether it will continue moving higher or lower, whether it's gonna form a wedge, whether it's gonna form a pattern, whether it's gonna whether it's gonna form a triangle, a cup handle around the top, because how the asset will perform after the breakaway gap, it will help you to decide whether the asset could extend in the long term even higher or whether it will return within this range. Okay? So any solid, decisive, big gap can be named is a gap away gap if it breaks key levels, important levels such as the upper or lower line in a channel, so the resistance support line. It might breaks a trend line that might occurs for many days or months, trend lines. Or if it breaks a triangle. Let's assume that our asset was moving in a triangle and it breaks it higher. So the breakaway gap is usually a very strong one. You see how big this gap is? In comparison with the common one, that's huge. Look how small the common one was from here to here. And look how massive the breakaway was. So that shows a decisive bullish momentum. A lot of bulls have set positions during the market, outside the trading hours. A lot of large orders, decisive buying. It led a bit of a selling in the next few days, but it managed to hold above the trading channel as something that indicated that the asset will continue moving higher. Now, one more thing about gap away gaps. Gap away gaps, like the most of the gaps, needs to be, as I said, is stronger than common gap because it can be considered as a very strong bullish or very strong bearish signal. So in the example that I showed earlier, this example, this is a very strong bullish sign. Not only because it's huge, okay, not only because it's huge, not only because it's outside the channel, also because the asset managed to hold above the channel and rebounded and extended higher. So we have seen some selling occur that fill a bit this gap, but the asset managed after this gap to remain outside the channel, above the channel. So our so far resistance has now been converted into support, then rebounded with 3 consecutive strong bullish candles, indicating that the asset will continue being driven by bulls, and this correction, this pullback, it was temporary, just to fill this gap and as a correction before another attempt to the upside. So very strong breakaway gaps could show a very strong strong bullish or bearish signals. This is a bearish example. You can see that our asset was consolidating, was actually not consolidating, was moving within a range once again, an upwards range, okay, higher highs, higher lows, but eventually it gapped down outside. So it's significant breakaway, a gap, it's outside the range. So one in the next session, you can see that the asset open, the asset the markets, the assets price, open price, it was outside the so far range, okay, presenting and forming this breakaway bearish gap. So it's since it has been occurred outside the channel and below the channel, this is the very first indication that the so far up channel, the so far uptrend, the so far bullish market, if you prefer, is changing. The sentiment is changing into the downside. So that was the very first indication. So you need to wait for the next session just to confirm whether we have a new trend occurring. And that was the case. You can see that even though the next candle was doji, so it wasn't to be trusted, the following one was a full body bearish candle, huge bearish candle, confirming that now the trend, the market, the sentiments had changed and is negative. We have a bit of a correction over here, but still well outside and well below the range and the previous high. So that was a small correction before the resumption of decline. So okay, so yeah. So now this support is our new resistance area. So as I said, the gaps is your very first indication that something is changing, that sentiment is changing, the direction of the market is changing. So it's your very first sign. But you shouldn't, it's not a call of action. You should wait for confirmation. Okay? So yeah, and again, 1 to 5 candles, just to confirm. Just usually, actually, just not to be strict, usually the gap is the gap is usually filled up within 1 or 2 5 up to the next up to the next 5 candles. That's not always the case. As you can see in my example, there was such a massive selling pressure that the gap was not filled. Okay, that's something that happens if the market has a lot of an increasing bearish bias. So there was an attempt here to revert a bit higher and fill the gap, but it failed. The pressure, the selling pressures was the sellers were in control. So that's why we haven't seen the market being the gap to be covered. This is the example, actually it's the same example. So this rounding top occurred after this is a rounding top, right? Rounding top, this is not the flag, not the pen, yes, this rounding top after the breakaway gap, it was the confirmation, actually the second confirmation, because we had this massive candle over here, bearish candle over here. So that was the second sign that we had that the asset will continue to the downside. It depends. Okay, Stephen, it's not always a rally. It depends what kind of breakaway gap you will see. You will see a breakaway gap to above the channel. You see a breakaway gap below the channel. Yes, it's the very first indication that the sentiment is changing, but you need to wait to see what will happen the following day, session, etc. So you see over here, okay, the confirmation was from this day onwards. So by placing a position here, a selling position with this resistance area, this support area as your stop loss, you will you would have stayed into the market regarding of this rebound and then benefiting on the very further decline. So this was a call for, it was a selling position. The previous one that we show, where is it? So we can't take any action as soon as the gap is being formed. No, we need to wait for confirmation. So for example, this one, we had a breakaway higher outside above the channel, but it opened here, sorry, it opened here, but it closed bearishly. So we're like, okay, we have a breakaway gap above the channel, so that's a bullish indication, but it closed bearishly. So that means we need to wait. The next day, doji candle, not enough to confirm us whether we're gonna go long or short. Following day, doji, bullish but doji. Following day, completely doji candle. The fourth day, lower, trying to fill this gap, doji, doji, but held the support level. So that resistance now is converted to support. And then we slowly started having consecutive bullish candles. So this looking like a rounding bottom. So on the breakout of the latest high, we could have entered long because now we have the confirmation that yes, it will continue to the upside. Okay, do you get what I mean? So it's not enough to spot a breakaway gap. You need to monitor it until it gives you the confidence that yes, I'm gonna turn, yes, I have more indications that it's gonna go up, I have more indications that it's gonna go down, so I can now get into the market. So it's not only the gap, you need to confirm whether it will continue the direction that was initially uh, uh, that was initially was. Third type of gap, runaway gap. So runaway gap typically seen when the trading activity skips, how can I say that? Basically, it's the runaway gap occurs there where in the assets that there was no trading. So between between the price points, price levels, where, as I said, there was a lack of volatility, so some kind of mainly driven, just to be in simple words, mainly driven by intense investors or traders' interest. So if we are in a trend, like the example here, in an uptrend, for example, if we are on an ongoing trend, and gap up, if we are in an ongoing uptrend, and a gap up occurs, that's just an indication that there is an increased intensity by the market participants for that particular trend. So like further boost for that trend to continue in the same direction. So it's not a reversal sign, it's a continuation side. Okay, runaway gap, it tends to be a continuation sign. So if we're in an uptrend and we have a runaway, we see a gap higher, that's a runaway gap, and just suggest that there is an increase in intensity in the trend, in the uptrend. So more and more and more transactions are being placed, higher transaction volumes that could continue to support the uptrend to the upside. Okay, so continuation signal actually. This is an example, as you can see. We were in a rally after breaking this, after exiting this range. We are in an uptrend, up in a rally, and then eventually, after four sessions of consolidation, it gapped up, stayed above the gap for 1, 2, 3, 4 days in a row, and extended further higher with another gap up, and higher and higher again. So that was indication that there are even more bulls in the market, increased transaction volume, or the existing market participants are just enlarging their positions. So that was an indication that there is further steam, further momentum to the upside. So for runaway gaps are the ones that are occurred if we have a clear uptrend or a downtrend, uptrend, and they indicate the continuation of the existing trend. So if we are in an uptrend, we have a gap up with the asset holding above the gap up and extending higher. That's a runaway gap. So that means that there is further steam to the upside. So it could attract more long positions. If we have a downtrend, we have a gap down with that is being followed by further decline, that means that there is further steam to the downside, so that could attract more sellers because it's a sign that the downtrend will continue in the same direction. Okay, easy busy. Last but not least, and pretty much on time, exhaustion gap. As I mentioned earlier, 4 reasons can lead to the gap: liquidity, downgrade, upgrade, earnings announcements. Okay, so exhaustion gap is exactly like the name, exhaustion. So it's not about fundamentals this time, it's about technicals. Some kind of over extreme conditions, overbought market, oversold market. So an exhaustion gap is a technical signal, which usually is marked by a lower movement, by a break lower. So exhaustion. So it means that there is not further steam, strength to the upside. So it's overextended, like the rally that we have seen over here. There was a long rally, lasted for many months. It breached to its peak, it consolidated a lot at its peak, okay? It posted a gap higher, which usually a gap higher suggests that, oh, there is some kind of bulls coming in. But in this case, if it quickly is returned lower, breaking our very next strong support level, then it means that it's not a runaway gap, but it's an exhaustion gap. Can you see the difference between exhaustion and runaway? So exhaustion, runaway basically, it was higher, same as exhaustion, but it held above the gap up, it hold gains and extended higher. So it posted new higher lows, new higher highs, and so on and so forth. So continue the same direction. The exhaustion, the very next few sessions, the very next session started moving lower and lower and quickly fill this gap. But it's not only that, it will be named exhaustion as soon as it fills the gap and start and breaks the next strong support area of the trend. So it's a sign that there is no further steam to the upside, that the trend has it's at its peak, and it's a reversal sign. It's a sign of fatigue that often occurs in a long rally. Okay, and it often occurs when there is a rapid rise in a price, in an asset price, over several weeks. So this is a reversal sign. But you need to be, again, patient. You need to wait to see this gap and see whether it starts to revert down. As soon as it starts reverting down, closing and filling up this gap, you need to be patient and wait until it breaks the next floor. So you see, the next floor, it was the low that we had before the gap up. So it came quickly the very next days, exactly the next day, it started moving lower and lower, and slowly it filled this gap. In 4 days it fills this gap. It fills the gap in the 4th day. The 5th day it remained at the support level and eventually started moving below it. So it will be let me zoom in. So a potential sell position could have been placed here because it was the very first candle that it confirmed the breakout of this support. Or if you missed it, or you weren't sure, or the momentum indicators were not confirming this short position, you could wait for the next candle and the very next one until you had a confirmed strong bearish candle that such as this one. So this was another chance to enter short because for the long term. Okay, this is a daily chart, so that's a position that might last for weeks. What else about exhaustion? So it's a reversal signal. It's a signal that reflects a significant shift from buying to selling. Usually coincides with a falling demand. Yes, and this indication that soonish this uptrend might be run out of steam, might be to its end soon, and we might see a downtrend slowly starting to occur. Okay, last but not least, we're nearly at the end. Island reversal. Okay. So island reversal is an asset that sorry, an asset is a formation that includes two types of gaps, a gap up and a gap down. Okay, it's called reversal, island reversal, because it obviously signals a reversal of the overall momentum, of the overall trend. So we have an island reversal if we identify a gap higher, and more precisely an exhaustion gap. Okay, so you see we're in a long-term uptrend. We have a boost higher, okay, but and it holds above it for 1, 2, 3, 4 times, 5 sessions in a row. So we weren't sure back then whether it's a runaway gap or an exhaustion gap. Okay, it had been proven to be an exhaustion. As soon as we've seen another gap but lower, another gap down, so it's a combination of a gap up and a gap down, along with the breakout and the filling up the previous gap up. You see, a gap down that not solely created a gap down, but also filled the previous gap and closed below it. Something that is not easy to be spotted. So is an exhaustion gap, contains two gaps, a gap up and a gap down, so the combination of two in the opposite direction. So in this case, because we had been in an uptrend, we got a gap up and then a gap down, filling up the gap up and extending and closing below it. So this candle, it was as soon as this candle closed, we could easily see that we had two gaps, with the latest candle not only filling up the first gap, but also closing below it. So there is this, so it presents this island, this is so-called island reversal, which once again could be confirmed with the next 1 or 2 sessions, just to make sure that a new trend has started. And indeed, as you can see, steady over here. The following one posted another lower low. This was steady, but it posted a new low. The very next one, bearish, and another new low. So we by in the next 2 sessions, we could spotted that a new trend has started, and downtrend in this case. So guys, that was pretty much it. That was it in regards to the gaps. We have another 2 sessions in July, so we're gonna go in more in depth and more advanced. But if you fundamental analysis like non-farm payrolls cutting change direction if gap says bullish, Ernest, as I said, gaps usually form outside trading hours. Okay, if it's during trading hours, it will be quickly filled up. Yes, non-farm payrolls could lead to a gap in the very, very short time frame, because I assume that you're referring to very short time frames, 15 minutes chart, etc. Yes, it could be spotted indeed, but always, I cannot like say, oh yes, every time that you have a non-farm payroll, you will have a bullish gap. No. Same mentality as the examples that we gave today. You need to be patient to see whether it will fill the gap, whether it will hold above the gap, and whether it will hold, it will present further signs of bullish signals that will help you take a position to the market. Okay, so it's not a matter of just spotting the gap. It's a matter to be patient, to wait, to see whether it will give you more bullish or bearish signals before you take your decision and enter the market. Okay, is that clear? Okay, guys, if you don't have any questions or any asset that you want me to check because you have spotted a gap, I will call it a day. So I will wait for a bit. Please let me know if you have spotted a gap into the platform and you want me to go through it. As I said, we have another 2 sessions in July about gaps, a more advanced one. But always trade what you see. A gap is a gap. what is more important than a gap is what happens after the gap. Okay, is what happens after the gap, because what happens after the gap, it will help you spot whether it's a common gap, so whether it's a breakaway gap, whether it's a runaway gap, or whether it's a exhaustion gap, and so on and so forth. Okay. Oh yes, good question. So our calendar is on actually. July schedule you there. So we have on the 11th and on the 25th. Okay, on 11th and 25th of July, dear Stephen. So on the 11th, actually, we're gonna see some strict strategies with rules, with steps on how to trade market gaps. And the very last one, it will be how you can use the gaps to your trend analysis if you are a trend trader. Okay, so that's pretty much it. You're welcome, dear Amr. Guys, if it was a bit boring for you, it's because it was the very basics of gaps. We're gonna go more in depth in the next 2 sessions. Thank you very much. Have a great day ahead. We're gonna host a live analysis tomorrow as usual. Okay, so take care, and I'll see you again tomorrow. Bye bye. Have a great day as well, Amr. Bye bye.